Hi everyone. So in this video, the question that we have in front of us is one of the most important topics for the paper FR, and that is the interpretation of the financial statement. Now the problem with this topic is that a lot of students lose marks in these questions because what they're doing is that they're only focusing on the calculations part of this topic, and they're not spending time in order to understand that what are the workings behind the calculations of the ratios and what's the logic and the reasoning why any one ratio is going to go up and the other ratio is going to come down. So that's what the examiner is testing in this particular question, and I'm going to be explaining that to you to help you understand and build a better understanding of the topic on the ratio analysis. So it says that which of the following ratios are likely to decrease due to significant revaluation gain on depreciating asset at the start of the year. So there are like different parts to the question, guys. You need to break it down in order to answer the question correctly. The first one is the return on capital employed. Guys, return on capital employed will definitely decrease, and I'm going to be giving you the reason for that, because the formula is profit before interest and tax divided by the capital employed, and in the capital employed we have got debt and equity. Now when your revaluation gain is going to be recorded in the part of your equity balance is going to go up. When the equity balance will go up, your capital employed would go up, and therefore your return on capital employed percentage is going to come down. So that is absolutely correct. The second one is gearing. And again, guys, as the formula is suggesting, debt over equity. Now, think of this, the debt remains the same. Debt is not changing, but the equity is going up. Why the equity is going up? Because my revaluation gain would be recorded in the equity section of my balance sheet. And again, for the same reason, when the equity would go up, the denominator is increasing and the numerator remains the same. Again, the gearing is going to drop because the overall proportion of debt is going to dilute in the overall capital structure of the business. Same with the net asset turnover, where the formula is sales divided by the capital employed. So guys, same explanation goes over here, that sales, assuming that remains the same, but the capital employed is going to go up as a result of the recognition of the revaluation gain under the revaluation reserve, and therefore the asset turnover is also going to dilute and would decrease. Now comes the operating profit margin. A lot of people ended up making a mistake over here, saying this thing that the operating profit margin will not get affected, and that's where the examiner played a bit of a trick, guys, in this question. They are saying at the start of the year. Now what will happen when the asset is going to go up? The depreciation for the current year will also go up, and therefore your operating profit margin is going to go down. Therefore, guys, the answer to this question will be option A. All four of them is going to go down as a result of the recognition of revaluation gain on a depreciating asset. And I hope this video will help you to understand that how the ratios are going to move up and down, and you will try your best to make sure that you pick out the correct answers in your actual exam. So thank you very much.